For the first time in decades, the G7 nations no longer produce the biggest share of world GDP. They've been overtaken by a new bloc, BRICS. That's Brazil, Russia, India, China, South Africa, and others. This bloc of countries now makes up nearly 35% of global GDP, and this is leading to a lot of talk about the rise of BRICS currencies as formidable rivals to the almighty US dollar as the global reserve currency. This chart represents the rise and fall of global reserve currencies and their respective empires since 1500. Before the US dollar, it was the British pound which dominated global transactions. Before that, the French livre, the Dutch guilder, and the Spanish real had their day. History shows a repeating pattern. As a new power rises, its currency often follows, and after World War II, America took its turn. The US dollar officially became the world's reserve currency with the Bretton Woods Agreement in 1944, and it's been that way ever since. But that may be changing, which raises the key question of this video. Could we be seeing the end of dollar dominance? First, it's worth asking why these countries would want to ditch the dollar, which is no easy task. This chart shows the relative standing of global currencies and bank reserves. As you can see, it's not even close. The US dollar is around 40% more prominent in reserves than the next place, which is the euro at 20%. That makes the US dollar essentially the operating system for the international economy. Oil, grain, microchips, most of the world's critical goods are priced and paid for in dollars. This means nearly every major international transaction has to pass through a US bank, and that gives the United States a huge amount of leverage because they can freeze out other countries like Russia and China if they do something the US doesn't like. And that's just what happened after Russia invaded Ukraine in 2022. The US and its allies froze hundreds of billions of Russia's foreign reserves, isolating them economically. And Western allies also blocked Russia from SWIFT, the system that facilitates international transactions in US dollars. For Russia and other non-Western countries like China, this display of American unilateral financial dominance constitutes a direct and persistent threat. And it's why the sanctions of 2022 galvanized the de-dollarization movement, pushing them to forge their own alternative. So how are they doing that? The first move was to reshuffle trade away from the West and away from the dollar. Here's a chart showing buyers of Russian oil before and after their invasion of Ukraine in February 2022. After sanctions locked Russia out of the Western market, Russia pivoted hard to the east. Its oil exports to India and China surged, while European exports collapsed. And here's the kicker. These massive deals are being settled in yuan and rubles, not dollars. Just look at the currency mix of Russian exports before and after the war in Ukraine. Before the invasion and sanctions, the vast majority of Russian exports were settled in US dollars or euros, far more than even their own currency, the ruble. But the dollar's share of Russian export payments has plummeted since sanctions took hold. Now, the bulk of Russian exports, nearly 3/4, are settled in Russian rubles and the Chinese yuan. This chart shows another move they're making, away from US treasuries. Since 2010, BRICS holdings of long-term US treasuries have declined significantly. Just 15 years ago, these countries held over 40% of global US treasury holdings. Today, it's less than half of that, under 20%. So what are they buying instead? The answer is gold. Here we can see China's gold reserves since 2015, as a percentage of their total foreign reserves. Notice the rapid uptick in Chinese holdings of gold since mid-2022. That's a very notable shift towards gold. This chart shows the same trend in Russia, where their gold reserves have also rapidly accumulated since mid-2022 after a multi-year plateau. Why are they packing their vaults? Because gold is a neutral asset. It's real money that no single country can print or sanction away. Vast stocks of gold could provide a foundation of trust for a new currency or financial system, a hard asset that exists completely outside the dollar's domain. Looking again at this chart showing global currencies, it does look like the US dollar's grip might be slipping. While still well in the lead, its dominance in global reserve banks has fallen from 70% in 2021 to 58% in 2024. That's a 12% decline, and nearly half of that decline came in just the past 10 years. The slack is not being picked up by the euro. It's coming from the small but notable uptick in other currencies. If we zoom into the bottom of this chart, we can see which currencies are filling the gap. The fastest growing of these is the yellow line, representing so-called non-traditional reserve currencies. They've risen more than 2% since 2020, largely at the expense of US dollar reserves. With this much momentum, the BRICS challenge seems formidable. But de-dollarization is far from a surefire thing, and there are cracks in the facade. because BRICS is not a cozy alliance. They're united by a desire to lean away from US influence, but within BRICS, deep tensions abound. China and India are bitter rivals with a tense military standoff. Russia's war in Ukraine is a point of contention, and others like Brazil, India, South Africa, and Saudi Arabia have closer ties to the West than Russia and China. And it looks like the idea of a unified BRICS currency is unlikely to come to fruition anytime soon. Not to mention that the dollar still has a lot going for it. The US still has the world's deepest financial markets, its most trusted currency, and its strongest military. That's a powerful combination for BRICS to come up against. So where does that leave us? We're witnessing a genuine turning point. On one side, you have a powerful bloc with immense demographic and commodity power, actively building an escape hatch from the dollar system. On the other, you have the reigning superpower, armed with unmatched economic and military might, pushing back against the challengers. Success for BRICS is not guaranteed, but one trend is clear. The world is beginning to show signs of moving away from a single point of financial control. For investors, this creates a landscape of both risk and potential. The tectonic plates of global finance are shifting, and where they settle will define the economy for decades to come. At Capital.com, we'll keep you updated on major changes in the global financial system, including the ups and downs of the dollar and other currencies. Hit like and subscribe to stay tuned. Thanks for watching.